So we should be live here, I hope, in about 10, 20, 30 seconds, something like that. And oh, it's redirecting, so we're not quite there yet.
This meeting is now streaming live on Facebook.
It just takes a little bit. Yeah, well, it went funky on me there, but that's okay. It's all good. So welcome to the wealth debate. And if I didn't have trouble getting it started on the right time, it wouldn't feel like the wealth debate. So welcome to everybody that's out there tonight, today, whatever time of day it is for you. I know we're going to generally have people from Australia, New Zealand, which it's tomorrow sometime there, whatever time of frame it is. And so if you're out there, hey, Rodrigo, please say hello in the chat box. I'll keep typing back and forth in the chat box. If there's anything that you guys want to talk about, any questions that you have regarding money, debt, credit, all those kinds of things, please let us know what they are. Would love to talk to you more about those things. If you are on here and you haven't said hello, I would appreciate that you do so. And Sam and I were just talking about, before we got on here, what's happening in Ontario, of all places. What's going on in Ontario? Sam, how are you tonight?
I'm good. They just announced a 4-week shutdown in Ontario. The school system is still running unless certain boards want to shut down particular schools, which in Toronto, in the Peel region, many have shut down. In the Middlesex County, which is our area, which is quite large, I believe one school has already decided to shut down. So it's not looking good for Ontario in the next 4 weeks. For folks, there's going to be a further hibernation period. I guess the groundhog saw its shadow. Is that right? The groundhog sees a shadow at 6 more weeks.
Something like that, yeah.
So in Ontario, it's Groundhog Day. So unfortunately, we're going to experience this continued hibernation.
So Sam, so we are, it's Wednesday, whatever the date is today, April 8th, maybe 7th, 8th, 9th, whatever it is, something like that. I can look at my phone and probably find the date much quicker. It's April 7th. Okay. And so 2 days ago in the great state of Texas.
Yes.
In the great state of Texas. And so we'll compare Ontario to Texas. I don't know if it's a fair comparison, but we're going to compare them. In this instance, Texas had its, the Texas Rangers, amazingly enough, played the Toronto Blue Jays. So the Ontario team in the Major League Baseball. And they had a sellout crowd of 38,000 some people. Many were wearing masks. Many were not wearing masks.
Most weren't wearing masks.
Well, I think many of them had them around their neck, and they were pretending to eat and drink the entire time.
Yeah.
Well, I mean, that's always the mentality. You don't have to have your mask on if you're eating or drinking. Well, some people, when they go to a ball game, that's all they do is drink. So anyway, so this has nothing to do with money, but I think it has everything to do with money, actually.
I agree. Money is a big part of this. Canada has failed to secure the vaccine needed to vaccinate the country. And this has created serious economic impact that's prolonged. Pain's going to be prolonged in Canada because of this. And it's disappointing that we're in this situation. A great example is that in Canada, you get 2 shots like the rest of the world. But after your first shot, many places, the United States as an example, it's 3 to 4 weeks you get your second shot. 3 to 4 weeks you get your second shot. There you go. Hello.
What's the problem?
I'm on Facebook Live. No. Awesome. No. So actually, my wife just came back. She's trying to get to the mall because the shutdown is tomorrow at midnight. Tonight at midnight. So she tried to get to the mall and she couldn't find a parking spot. So decided to give up on that attempt. So anyways, going back to the securing the vaccines in the United States, it's 3 to 4 weeks. You get a second shot. In Canada, they've decided to expand that to 4 months. Now, it's not because of science or they thought it was a good idea. It has everything to do with the fact that they don't have the vaccines to vaccinate everybody. So they're going to try to get everybody one shot, and your next shot is around 4 months. So 4 months. Now, who knows what that means for your resistance to the actual virus? We're going to find out, I guess. And this is due to the inability to get those vaccines. Now, I don't know what's specifically causing that. Canada doesn't want to flip the bill. There's not enough vaccines in the world. I don't know what the exact reason is or what's the truth behind that. I do know the United States estimates 2 million by end of April. Is that right, Pip? And
200 million.
200 million, sorry, 200 million by end of April. Another 40 million will have had or exposure to it. So that's it's more than 2/3 of the population. Far more than 2/3 of the population will have some sort of resistance to it. So what does that all mean? Well, it means that you can have 40,000 people in a stadium and not be as concerned, excuse me, if you did that, say, 6 months ago or a year ago. So we're a lot smarter now. We know how to manage the the virus a lot better. But you still need to get vaccinated. So Canada has found themselves in a really bad place, I think, and unfortunately, it's going to cost the economy billions and over the long term trillions of dollars. So the U.S. has decided to go in a different direction. Everybody mocked the U.S. for how they managed it, and there was some bad decisions made for sure in the United States on dealing with the virus in the early days, and some stuff in the middle that wasn't so great either. But say what you will, they are going to get vaccinated before everyone else. They're going to be able to run their economy before anybody else, and again, just ahead of the curve. So that doesn't mean it didn't come out with there wasn't a cost to it. But this is the point I want to make about it. This is a great example of the United States desire, culture, and spirit of the individual is the most important thing in the United States. And because of that, the individual is driving, and the desire for the individual to be able to protect and pursue happiness at their own risk, right? That's why the United States is where it is, I believe. So furthermore, the United States, Biden is trying to push through a rebuild public works project in the United States across the U.S., somewhere around $2 trillion over 15 years. He's hoping to recoup that money through corporate tax. Big part of it is corporate tax. They believe they can get about 2 trillion recouped in the 15 years, actually more than 2 trillion, even 2.5 trillion. Some experts estimate if they can get the tax rate from 21 to 28 plus additional funds, not just the tax hike, but money from repatriating tax dollars that were put in different countries, because a lot of U.S. companies are based in places like Ireland because the tax rate is less. And so they're set up there as their company, and that money doesn't get taxed the same way as it does in the U.S. That money never comes home, or it comes home, but it comes home in a trickle. So the consumption is in the U.S., but the revenue and the taxes enjoyed by other countries around the world. So they want to repatriate that money. They want to get that money back into the system, and they're going to use some aggressive approaches to taxing, whether you bring it or not. They're going to tax you hard on that if you want to be in the U.S. Now, I'm not a fan of taxes or hiking taxes, but I do believe there's something there with the repatriating the funds. I do like the idea of, if you're gonna use the consumer in the U.S., I think there has to be some cost to that. Nobody consumes more than the U.S., and I think you need to pay for that. If you enjoy the ability for the workforce that you have and the infrastructure that you have and the money generated, I think that you should definitely pay some contribution into the system to continue to maintain that system. So Public Works project is looking over the next 15 years. This could be one of the biggest booms in the history of the US over the next, I'd say, at least 8 years, right? Because we'll get 2 terms out of this president, I believe, or at least this administration. Sorry, at least the Democrats for the next 2 years. Sorry, 8 years, if we can be successful in the first 4 years with this public works program, and if it can get passed. So there's going to be a lot of money in the system. We should see some amazing growth in the market and in real estate. Real estate's going to become extremely appealing if the corporate tax hike comes up. People will start looking for other asset classes to make money. I think real estate definitely will be there as an opportunity. And I think that they'll continue to hold rates to allow the economy to grow. So it'll probably be too late when they start raising rates. Typically, right, that happens. It's always a little too late because they're behind the curve. They think the economy is going to heat right up in the U.S. over the next 8 years. So it could be a wonderful time. Of course, that'll come to an end, but we'll deal with that. We'll deal with that later. So I think a lot of other countries are going to choose to go into that direction. Some already have. So I think that there's going to be some heavy spending in the U.S. and it could create a really hot economy in the next 5 to 10 years, decade. Pip, you want to say something?
I want to say a lot of things
Sure.
because interestingly enough, there's 45% of the population that would totally disagree with everything you just said there.
Wow. 45. I guess I'm part of the majority this time. That's rare.
Yeah. No, I would say if you're a conservative Republican in the U.S., the whatever you want to call it, the $2 trillion spend is the worst thing that you could ever even imagine if you're on that side of the aisle.
Sure.
And reason being is because the 2 trillion, very little of it is going to be seen. It's going to be to be taken by the corporate tax or paid by the corporate tax. And anytime you raise corporate taxes, what we've seen over history is that it actually suppresses employment rather than increases employment. And so there is some, and you want to call this the wealth debate. I'm trying to be as much on the other side of this as possible because I see it just the opposite. Is a lot of people on this side of it seeing it just the opposite of that, and they're not a fan of this thing whatsoever. And so
what's the reason why?
Because it's just government spending. And so what are we doing? We're creating all this money, and this is where the binge of inflation comes. We create all these. I mean, we got a problem right now with lumber prices. Lumber is how much higher than it was a year ago. And it's, and we could see a lot of other durable goods in that same thing. Gas is higher. Most of your minerals are all higher. Now, obviously, some food prices are higher. I think you're going to see some pressure on that kind of stuff if we keep saying we're going to put 2 trillion in, we're going to do more trillion and more trillion. We've already done 2 trillion with COVID spending, and we've got a lot of weird stuff happening with housing here. We haven't foreclosed on anybody in a year, and will we foreclose on anybody in the near future? I have no idea. At some point, those people are going to have to pay those mortgages, or the bank's going to foreclose on them, and the bank can't just forever let you not pay because they got to make money.
Yeah.
And so what's happening here is you've got a good percentage of the population, I'm going to say 45%, that totally disagrees with this $2 trillion spend. They don't believe Biden will make it to a second term, and they definitely don't want Harris to be in there at all. I mean, that's the mentality. And the reason being is you're starting to see things, and I know this is getting into a political discussion, but it all comes down to economics, is you've got this situation at the border right now where we've got this leaky faucet of just people coming across. I find it interesting that the U.S. gets all this grief, but yet everybody wants to come here. And I find that to be an interesting thing, but I think it's exactly why you say. And I think it comes back to, we even talked about this before we got on here with COVID. I believe the reason the U.S., first of all, and you said it as well as anybody just a minute ago, it's all about the consumer. It's all about the freedom. They want the freedom. We don't want socialist medicine, or we would have had it already. we don't want certain things or else we would have had them. I mean, that's the thing. It's, majority rules with votes and stuff. And maybe there's some things that are simple majority versus a large majority. And so I get that. But the point being is there's a lot of things we would have had the majority of people wanted it. And I think the socialist medicine system in Canada, and I already said this to Sam before we started, is one of the reasons I'm not saying that we did great with the COVID, and there's a lot of political arguments one way or another on that, but I think the recovery after COVID is going to be strong and swift and fast because of the fact that what Sam is saying. And so with that being said, the government's got to figure this out, that if they just keep pumping money back into our economy, eventually we've got to pay for that. And we're going to see that in inflation, I think, to a certain extent.
Yeah, I think you're right. But what tends to happen, or has happened in the past, not always, but the debt keeps being renegotiated at a lower and lower cost. This is why I think deflation is the bigger threat for the US than inflation. So I think that this public works program is a good thing for the country. I do think it's a good thing for the country. And I think that the jobs and for these corporate companies, these companies that are upset about this 28%, I think a good portion of it will be offset by the continued consumption, continued consumption of the Americans, because they'll have the money, they'll have the jobs to continue to consume, so sales will be up, and this could offset some of the tax implication. I think it's important to recognize the benefits that a corporation in the U.S. enjoys and gets to benefit from, like the roads and the fire department and the hospitals, and all these things that keep the workforce in play for these corporations. For the most part, they don't pay very, very much into that at all. Now they do create an environment for jobs, and they do create, I mean, I get that, they create the ability for people to consume and pay taxes and to enjoy life. I just think that when you're asking the country to burn on both ends when you do that. When you're asking to pay no taxes, and then the taxes you're supposed to pay, you're trying to, save them in another country. I think that's very difficult for a country to continue to build their infrastructure if those tax dollars are lost. Now, the bigger concern, and I think it is a real legitimate concern that people have, is this money going to be spent properly? And the government has a terrible history of public works programs, or programs just driven by the government that are done properly. So the 2 trillion, you can multiply that by 5. It's more like 10 trillion, just because of the abuses and the corruption. Unfortunately, that's going to be taken advantage of by the government. Because when the tap turns on, everybody just goes crazy. So I think that 15 years is going to be more like 30 years, and 2 trillion is going to be more like 10 trillion, or even could be even more. Who knows? I think that's something to be concerned about. Ultimately, though, I think if the United States does not do something drastic like this, the aftermath of what's happened, I think, is going to be a serious problem. What's interesting to me is I think that China, of all countries, is going to be the most supportive, and I think they would even lobby for this public works program, because the United States is the biggest consumer in the world, and they want them to have jobs. And if the government's going to flip the bill for them to buy Chinese products, I mean, they're going to be all over that, I think. I don't want to oversimplify all the dynamics involved in that trade between the United States and China, but I mean, let's be real. The United States by far consumes the most, and per person, I mean, they're just that's what they do. They do the best thing they can do, and they do well. It's consumed. So I think this is important. I think this is important for the country to do something like this to keep things moving along.
Well, and I think, and I'm trying to type
Sure.
and talk at the same time. I can't hardly talk, let alone talk and type. And so, the point being is, like I said, I'm just telling you that there's a 45% of the population here that would disagree and say the reason we'll grow isn't because the government coming in and creating jobs. It's private industry having the ability to create jobs. And there's a lot of arguments on both sides of that.
Sure.
One of my favorite things ever and it was said by Ronald Reagan. He said, the scariest words you should ever hear is when somebody says, I'm from the government, I'm here to help. That's like he said that was the scariest thing you could ever.
I think, yeah. Go ahead. Sorry.
No, I'm just saying, and I don't know, obviously, and some people are asking about inflation. You keep printing money, and I don't care if you have jobs or not. If you just keep printing money and there's nothing backing it, I mean, there's got to be a lot of consumption for $2 trillion worth of stuff. Now the one thing it's over a bunch of years, and then you got to be careful because I believe the number was, they said that would create 30 million jobs. Well, the comment was it'll create 30 million jobs, but 27 million of those jobs over 15 years would have been created without the government spending. That's the typical GDP every year going up. And so when that happens it's going to create, the real numbers are about 3 million jobs is what it's going to create.
Both are going to happen. Industry is not going to not create jobs because of this public works program. In fact, there's going to be a great generator for jobs. I mean, these people need to eat and they need to, go out on a Friday night and they need to consume. I mean, this is not bad for the country or even corporations. Corporations are going to enjoy the benefits of the infrastructure build. So I can't imagine that you're not going to get more jobs with this. And if yes, jobs are going to be created over time. Yes. All these things are right. If the government doesn't have to choose to do it this way. They can do it other ways. But the corporations kind of make me laugh because they've had their fill of welfare. Like they've had their fill. They've gotten their fill. Okay, the last crash, the disaster. Okay, the government decided to save most of them. And I don't remember them saying this is a bad idea to get government help. I don't remember them saying, "Oh no, please don't bail us out."
You don't remember GM and Chrysler?
No, exactly. No. We'll be fine. Let's go bankrupt. This is hogwash. It's easy to talk from a strong position about what's right and wrong, but when you're in dire straits and the government says, "I'm going to stop you from going bankrupt. I'm going to force other banks to buy your toxic assets, so they don't disappear and we don't create a financial crisis and crash." These guys didn't say no. In fact, people argue that Bear Stearns was a bad idea that they let it go. They didn't move fast enough. So there's tons of opportunity. They've had their fill of taking government money and being bailed out. And yes, they jobs are involved and the system was involved and they're too big to fail. Well, the American individual is too big to fail. You can't have these freedoms and these rights without some sort of responsibility, and that goes across the line to corporations. Corporations have to take some accountability and responsibility if they want to enjoy. If I was the United States, if they want to enjoy the consumption of the United States, you're gonna have to help in keeping the system moving, and part of that is roads and bridges. And jobs, right, to consume. Not everybody can work at Amazon part-time. That just doesn't work. Not everybody can work at Walmart part-time. A lot of people can. You can, because competition. We talked about this, push prices down. But this idea that, oh no, this is bad. Government, no. Corporations, no, we shouldn't do this. This is bad. These guys can't talk. Please, make me laugh. 2008, your hands were all out like this. Give me the money, buy shares in my country, buy shares in my country, my company, buy shares in my company. You want to talk about the most anti-capitalist move possible is a government buying shares in a publicly traded company. What a joke. Was it necessary at the time? I think it was, but to claim, that capitalism is going to solve this all on its own. Give me a break. 2008, you guys weren't saying that. You weren't saying that because you were facing death. Now, we're not in that situation today. It's not dire straits, but I'm telling you, it's close. It's just moving slower than the financial crisis. Thank God, we're in the Titanic. We're seeing the iceberg. we're afraid we're going to hit it. We start turning, it's only 5 miles away. Well, this time, in the financial crisis, it was 3 miles away. We're 50 miles away. We have an opportunity to turn and miss that thing. I mean, take advantage, make this opportunity work. And sure, there's a lot of moving pieces to this, but it's either that or continue to lower rates, continue to create programs that cover up the lack of GDP and job growth. Let's just cover it up like they did and what drove 2008 to the collapse. I mean, they did the same thing. So are we doomed to repeat that scenario again? It's possible. It is very much possible. It's likely even, right? History tells us. But to sit back and say, oh, it's okay, it'll take care of itself, I think that's naive. I think that's crazy to think it's all going to solve itself. There's massive unemployment coming. Massive unemployment coming. You think the government would soak this kind of cash in if they thought the employment rate was going to recover on its own? This garbage about a 6% unemployment because of the last jobs report? Give me a break. Give me a break. Really? All these people are at home, not working, and the unemployment rate's 6? Give me a break. That's ridiculous. The United States is in serious peril right now, and they need to take action. I'm not saying this is the only solution, but to give me a break. These guys are going to create more jobs? Yeah, right.
So, like I said, I'm just trying to tell you what 45% of the group is saying. The one thing that I'm going to say about all of this, and I don't care if you're a Republican, Democrat, liberal, conservative, everybody's got their opinion. I'm not going to try to change it. Everybody asks, what should you invest in? And there's people wanting to do Bitcoin and other cryptocurrencies and all that kind of stuff. I have my own opinions of those, which I'm not a huge fan of. There's some opportunities. We had a guy on last week, Mark from Australia, was looking at some stuff, and good for you. I mean, I obviously, I'm not a prognosticator. I can't tell you what's going to happen. I don't have a crystal ball. The one thing I keep going back to, and I think there's a reason it's called real estate. It's got the word real in it. It's not going anywhere. No. And it's something that everybody needs. Everybody needs it. Nobody needs to have a cryptocurrency. Nobody needs to have gold. Nobody needs, at least silver has some other uses. You can use it for dental stuff. You can use it for, I think it's used for some electronics. What's that?
It's huge, pretty huge. There's lots. Silver's used heavily.
Electronics, I think, as well. A lot of silver stuff. But what I'm getting at is I like real estate because of that one factor that everybody needs it. And no matter what, everybody that's watching this right now is watching it somewhere in some real estate, whether it's, in a house, in an apartment, if you're somewhere else in a flat, whatever. Silver spoons. That somebody said, okay, silver. There you go, silver spoons. Yeah, China. Or not China.
Part of the problem, actually, that's part of the problem for silver is because it's used in manufacturing, because it's used as actual metal that's used. That's part of the problem. You can't be priceless if it's being used. Gold, really, the less utility that you have, the more your value can be just fabricated out of the air, like a rookie card has no utility, right? Babe Ruth rookie card. A painting has no utility, and I don't mean that you can't be inspired or moved by a painting, by art, but if it really was judged on the contribution, how about digital art? Would that guy pay 65 million? Like something stupid? These things are priceless. It's a shame that we put a price on them. Because they become ridiculous. So it's because silver has some utility, way more than gold. That's created a negative pressure on it. It's ridiculous, but it's created a negative pressure on it. You would think it would be the opposite. Gold is, it's used, but it's not nowhere near silver. Nowhere near silver. And Pip's right. Real estate is, at worst, real estate can create a forced savings, for yourself. Everybody needs it, Pips, right? You don't need an iPhone. You don't need these things. He's absolutely right. So real estate creates the lowest amount of risk. Here's the problem. If you want to profit in real estate, buying it and holding it's not the way to go. That's not going to make you money. Over time, at best, you'll break even. If you're lucky, you'll break even. it's if you want to extract money from it, you have to learn how to do it. It's like anything. If you want to extract money in the stock market, everyone thinks they're a hero because they bought stocks and last year and March, April, May, thinking they're brilliant. Give me a break. I mean, the market's gone straight up for the most part. You want a good synopsis of what's happened last year? Go look at GameStop. Look at their chart. What a joke. I
What's
mean,
it at now?
what's that?
Did it go
I
back
think it's
down?
at 100. I think
Did it go back down?
it did. Oh yeah, not to where it was. Not to. Let me see. Actually, I'm gonna check that.
Well, I mean, some of those have gone up and down. It's like a yo-yo. And so we're talking about uh, silver. And one of the comments was that silver was used in film. So
There you
like
go. Sure.
Fuji and Kodak and all these companies. And I still have to laugh when you look at Kodak. And I mean, Kodak was probably one of I'm guessing at one time they might have been on the Dow because they were that big of a company. I don't know
They're
that, but they
big,
were a big
huge,
company.
huge, and they were the biggest. I think they were at one point the biggest consumer of silver. I think.
And they were the first ones to have the technology for digital
Digital.
film, digital pictures.
Yeah.
And they didn't think it would go anywhere, or maybe they hoped it wouldn't go anywhere. And they didn't end up using it. And now they're pretty well bankrupt. And so
Yeah.
it's
Yeah.
interesting to see that. But yeah, I mean, I like real estate, obviously, because of the things we're talking about. But, at the end of the day, what'd you say, GameStop? Did you look
Yeah,
at GameStop?
GameStop is sitting at 177, 177.20 if you include the after extended hours. But this stock, like this is a chart. If you look at a chart a year, let's look 6 months. So 6 months ago, this stock was $11.45. Okay, then it peaked over almost like 350. It was January 27 of this year, and then it dipped real quick to 193, then popped up to 325, went as low as $44. Okay, and that was in the 44, 45 range. That was February 23rd, and then it rose again to 260, and then dropped down to 120. Like, this is ridiculous. This is the span of, and now it's sitting at 177. And I'm pretty sure this company doesn't make any money. so it doesn't. Price to earnings is negative 53.51, $53.51. Earnings per share, negative $3.33.
It's like buying a property that loses $500 a month.
Exactly what it is. This is the pursuit of capital gains. You want to participate in the stock market, you need to understand capital gains and how to get it. There's lots of money to be made in the stock market, but understand it's not something, again, this idea I can just hold on to it and things will work itself out. You have to have an entry, exit, profit target, just like we approach real estate. So you got to let the market tell you what to do. You can't tell the market what to do. It'll laugh you right into the poorhouse. So I think you want to take the opportunity that's available. I really believe that the United States is going in the right direction with this public works program. Sure, there's a lot of concerns and challenges, but I think this could be a really good idea. The dilemma is, if they screw this up, you can guarantee deflation in a bad way. So you got to be very careful. I really still believe the deflation is a bigger concern for the U.S. than inflation. We'll have to see. We're going to see what happens when you do a public works program, and then the natural job growth and extra job growth from this extra money is going to happen in the corporate world, in the private sector. To see what the combination of these create in the money supply, because there's going to be massive, if it happens, massive money in the money supply, and it'll create a push price up, which should create inflation. The dilemma is, these companies are not going to make any money. I mean, the higher these companies are going to go, they're not going to make any money. Now, there should be an adjustment, and we should see that. But when you're $177 to pay $3.33 per share, you got to be kidding me. Like, this is insanity. Doesn't mean you can't make money. in the stock market. You just got to understand you're pursuing capital gains. You're not pursuing earnings. Not in this time. No way. Not for a long time, actually. There's no money to be made in dividends.
So a question was asked: are Zoom stocks worth anything? They're at $323 a
Oh,
share.
sure, sure,
If you go back to
sure. Pre-COVID.
pre-COVID,
I
I'm trying to
traded,
find it
yeah,
on
I've
here.
traded that. Yeah, I've traded Zoom in the beginning. I was trading it, and Zoom continues to grow. So when you're in the stock market, especially now, your companies that have the potential to continue to grow, have growth, will continue to grow in stock price. They don't need to make money. They just need to continue to grow. And the money supply, just if as long as it increases, people will keep throwing money at companies like them. But the company doesn't make any money. I don't believe they've turned a profit yet. What were they, Pip? You looking at it right now? What were the?
Yeah, they were. I mean, they were before 2020. They weren't even hardly at a share price whatsoever. Less than 20, and now they went up to over $600 a
It did.
share
It did.
for a little bit. Now they're at 323.
Yeah. So a year ago, this stock. Let's go 1 year. So 1 year ago,
112 was what it was at. The
even
low was 112. The high was 588.
I remember trading that below $100.
I'm
And,
sure it was back
yeah, yeah,
2019.
yeah. So this stock, just went homicide. And then it's pulled back, obviously considerably, half its money is gone. But Zoom continues to be more of a staple product, and when they can monetize it better, things will go. Our earnings per share, it's got $2.13. I'm shocked. Wow, that's amazing. I didn't think this. Price per earnings is 151 times. So you're not making much return on that, obviously. But the fact that it made $2.13, I'm amazed. That's amazing.
It was about $70 a share
Yeah, that's right.
November of 2019.
Yeah. So
The
yeah,
lowest
remember
I see on here is $63 a share.
it was somewhere in that range, the 70 range when I was trading it. I'm playing around with it, but to see it go to $600 was, that's unbelievable. Um, Anyways, again, there's going to be opportunity. I think that if you're looking for a specific thing to buy or a place to put your money, the best, if I was to generalize, and it's as silly as saying put your money in the stock market. It's real estate. I mean, the stock market is a great place to make money. You'll make more money faster in the stock market than you will in real estate, but it cuts both ways, right? So there is no stock to buy. I would ever recommend to anybody stock to buy or place to put your money. I would just say that if you're going to put your money in the stock market, you need to be able to manage trade management's key. So just sticking your money in there and closing your eyes, I think, is at some point it's gonna take everything you got. So you want to be able to draw money out and reinvest. Something keep reinvesting, but you want to draw some of the money out, take it off the table, and maybe put it into something that's a little bit slower moving, which is real estate, which I still believe has got lots of upside.
Question was, which stocks did well through COVID? Well, we've just mentioned two of them,
You
Zoom
got it.
and
Zoom, you got
GameStop.
Amazon, amazing. Netflix, stay-at-home stocks. They call them the stay-at-home stocks, right? So anything that's stay at home, you're gonna make money on. Or
How did
or a
FedEx do?
company.
How did FedEx do?
Excellent, excellent. FedEx is doing excellent because of this. For sure, they're doing great. So the delivery system is great. What was the other company I was thinking of? So delivery was huge. Amazon, Netflix. What other stay
There
home
was
stuff?
one of them that shouldn't have gone up, and it did. It's kind of
Oh,
like GameStop.
companies. I can't remember that company. I don't know who you're talking about just yet, but the companies that helped companies transition from storefront to online exploded, because there was such a drive. Everyone was running to, we got to go online. Like, we have to go online. We don't have a big enough presence. We got to go online. Web companies like Wix, trading companies like Interactive Brokers. Think of what people do when they stay at home. Whatever they do when they stay at home, they're staying at home. You're gonna enjoy that more. Real estate, residential real estate, and outside metropolitan areas exploded. It's just people, right? Where the people move, right? Migrate to, and how their habits or how their behavior responds to an environment. It's not that complicated. Actually, there's videos. I got videos of when COVID just hit, we were talking about Zoom, investing in companies like Zoom, if you were looking for stay-at-home stocks. So that wasn't some, mythical call there saying, Zoom's an opportunity or Amazon's an opportunity. It was just, it made sense at the time. But I'm telling you personally, I didn't hold any of it. I didn't get to enjoy, a travel from 73 to 300, or sorry, 600. It didn't happen. I don't, because who knows 600 was the top? Like, who knows? Probably the biggest one that I'm not a fan of, but continues to rise is Tesla. I mean, Tesla's exploded, and at some point Tesla will come to earth. But I mean, the fundamentals of Tesla are ridiculous to me. It's just like these other companies like GameStop, and I mean, even Apple to me doesn't make sense. Amazon really doesn't make much sense to me, and Netflix doesn't make sense in the way of investing for income. These companies, they don't pay enough for the risk that you take. So if you're going to trade the market, you got to trade capital gains, right? Or you got to be more creative with things like covered calls or spread trading. I'm a big fan of options. I believe options, great opportunity to control your risk. But again, this is stuff you need to be educated about and trained. I don't think anybody should be participating in the market unless you've been trained. That's my view. Speechless, Vip.
Oh, I'm looking at, people are asking about stocks, and I don't know anything about stocks. I'm looking at some different ones. I mean, I literally know nothing about this stuff, and so for me to even speak on it is insane. I love to go back to the Warren Buffett mentality, and I definitely love Warren Buffett. He's from Nebraska. I don't know if anybody knows where I'm from, but I'm from Nebraska. So there you go. And so he always talked, and if you go back to the tech boom from the late 90s and early 2000s, and I know I've said this before, but it mirrors real estate so quickly and easily, is he didn't want to buy any of those tech stocks for the same reason he wouldn't buy Tesla right now, is because the price to earnings ratio doesn't make sense. What'd you say the price to earnings ratio on GameStop was? Negative something?
Negative, yeah, it was negative 33 cents is what they're paying.
Comparison of price to earnings on a stock versus real estate, that's the cash flow that it can generate to a certain extent.
Get it? Yeah.
So he's looking at the Teslas of the world, and yeah, it may get some capital gains, but you're not going to get it forever. And you can't put your kids through college on capital gains. You got to have cash flow.
You got to open a position and close a position to realize the gains. So where do you re-enter? Like, it's like trying to buy let's sell your real estate property in metropolitan, San Francisco. If you're staying in San Francisco, you're going to pay the premium, that you sold. You sold for a premium. You're going to buy for a premium if you want to stay in the same area. So, I mean, it's the stock market has opportunity. There is opportunity. What's funny is when Warren Buffett wouldn't buy into it, he was called a fool. When it crashed, he was called a genius. I mean, this stuff's hilarious to me. It's, forget about it. I knew this and I knew this, and you should have done this and you should have done that. Give me a break. Nobody knows. Nobody knows. I mean, when companies can be, priced out like a Tesla or a GameStop and not make any money, I don't care who you are. That's ridiculous. That's an insanity. That you could predict that. You could really. So this is the new formula. The less money you make, the more people should throw at you. Come on, this is silliness. I mean, he's a genius and he's going to get us to the moon. And this, I mean, come on. Like, but you want a creative mind? Talk to my son. You know what I mean? 17. You know what I mean? He was actually more creative at 9. You know, so is he the one that you should be throwing millions at because he's gonna, it's gonna take us to the promised land? Come on, this it's easy to dream. It's easy to dream. I'm talking about business. I'm not saying some of the things he's talking about are amazing and it's exciting and the future is exciting. But give me a break. You're gonna play the business game too. If you don't make money, I'm sorry, your company's worthless to me. In my eyes, it's worthless. It's worthless. And I mean worthless on a balance sheet. Insolvent. Many of these companies truly are, but people keep throwing money at them, so they're not insolvent, right? But let's be honest, if you're making no money, how do you reconcile that? Now, a company can take a loss. I get it. You can invest. But it bothers me a little bit that these companies get listed on the New York Stock Exchange making no money. Like, I mean, I don't get that. I don't get that. You were so good you couldn't raise money in the private sector, so you had to go to the public and fleece them. Come on. These companies, another one that drives me nuts now that I'm thinking Uber. What a disaster. Uber's a disaster. It's a disaster. I mean, give me a break. These companies are hilarious. They came to the New York Stock Exchange losing money, and people bought it. Like, I don't get this. You know what I mean? You shouldn't be allowed to be in the stock market. You can't get in the S&P unless you have, I believe, it's 3/4 consecutive earning. 3/4, that's all you need. I think it's only 3/4 to get the S&P 500. But to be listed on the New York Stock Exchange, well, we don't care how much you're losing. All we care about is, hey, can they make a market for you? For the public. Will the public buy into this? This is ridiculous. Please, people, read about the tulip frenzy. Please. People were paying a year's salary for a tulip. No, I'm sorry, the bulb. It was a tulip bulb. A house. Like, people were ridiculous. You know what I mean? And I look at the stock market and all I see is tulips everywhere. It's unbelievable. But it doesn't matter what I think. Can these stocks keep going up even though nothing makes sense about them going up? Yes. Who cares what I think? You know what I mean? Who cares to you? Musk worries about me and what I'm saying about his company. He doesn't care. Stock keeps going up. People keep throwing money at him. It doesn't matter. But if we're talking about business principles, these companies are laughable. They're laughable. And it's laughable to me that people are trying to value these companies at some certain price. I'm sorry. If you don't make money, it's really tough to say that, that's a company worth investing in.
I just find it interesting at 45 minutes past the hour, that's when Sam starts laughing every time. Literally, we could go back and look at every one of the 16.
That's not true. That's not true.
It's not true. Wendy, you've been on every wealth debate we've done, I think. And Wendy, you can probably go back and look. And when Wendy's going, I can't believe he's talking. Yeah, I'm talking to you, Wendy. It's at 45 minutes after the hour, almost on the dot. And it's so true. And it's the way it is.
I'll tell you, the stock market to me is, real estate, the whole thing is funny. I find humor in it because you can't trap wealth. It's impossible. There's zero evidence that you can trap wealth. Zero evidence you can trap wealth. And I'm not talking about the fantasy stuff of art and, rookie cards that have zero. And that's the only way you become to these prices are, it's got to have zero utility. Zero. Because if it had any utility, it'd be on a different scale. So it has to be completely useless. Completely useless. And then the price can be astronomical. Then the price. What's that? You need a pop?
Baz is giving me grief for drinking my Diet Coke. Yeah. So we're having all kinds of fun here. We're not really. I don't know.
I know.
I don't know anybody's listening to you, but we're going through lots of cool stuff.
That's okay.
It's all.
You know what? it doesn't matter what I say or what I think. It doesn't mean just because these things don't make sense, it doesn't mean the price can't keep going up. Real estate can't keep going up.
Well, and it doesn't mean,
Sorry, go ahead.
and it doesn't mean that we're at 50 after the hour and we're about done for the wealth debate tonight. Do you have some parting shots, some final words, my friend?
Don't think you're smarter than the economy, and don't believe for a second you can predict the future. Take what you think you can imagine the future is going to be like, multiply it by 1,000, and you're not even close. That's how hard it is. So be kind to yourself and others who make predictions and say this is going to happen or this is going to happen. But I'll tell you, taking advice, financial advice, from people that are going to tell you this is going to happen, this is the way it is, the best we can do is speculate. The best we can do is predict. But the accuracy of many of those predictions are hit and miss. I mean, what is it? The monkey on the dartboard, right? Throw a dart at the Wall Street Journal and pick your stocks that way. And you might end up doing better than, listening to the guys on CNBC, which, by the way, I love those guys. Anyways, I think that it's awesome that you continue to educate yourself. Recognize, and the last thing I'll say is this, is the laws. Remember, all wealth is created. You can't trap wealth. Supply and demand determines the value of all things. We need win-win transactions. We need access to debt. And of course, the way to get paid in this world, based on these principles, these laws, is to solve problems. That's how you become a true entrepreneur, and that's how you build wealth at the fastest possible velocity, is to solve problems. That's when you're talking the big deals and big money. All right. That's all I want to say.
Please do me a favor, share this with other people, let other people know about it. Family, friends, people enemies, people that you think would disagree with us. Love to hear, Sam would love to hear that. I want everybody to agree with me because that's just the world I live in. It's called utopia. That's what's up here for me. And so next week, same time, same bat channel, same bat time, we'll be on the wealth debate again. So once again, you can go to my YouTube channel. If you're not on the YouTube channel, I'm going to ask you guys, please get on my YouTube channel. You'll see these videos and you'll see a boatload of other videos on the YouTube channel. Love to see those. Please subscribe. I don't know what else to tell people. That's all the shameless plugging I can do for the night. And we will see you guys a week from today on the wealth debate. Have a great evening, everybody. We will talk soon.
And we're out.
I think we're out. I never know.
Cool beans. Cool beans. So Baz was on there. That's nice.
Yeah.
That's nice. That's nice, Pip. That's nice.
We may still be going on the.
Oh, really?
Look, I don't know. I can never.
You're hilarious. That's hilarious.